for most traders, the biggest pain is this missing out on the opportunity, on the big one. Missing out on the big one is much more painful than getting into a loser or, making a mistake and it turns into a loser.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders podcast.
Welcome to Two Traders. It's Walter here, and hello, Darren. I've got Darren on the line here.
Afternoon, Walter.
So, Darren, we have this question for this episode, which is, how many systems, when you're first trading, how many systems should you start out with?
Yeah, this is a good question. I kind of know where you're going with this, so I'm deliberately going to derail the question.
Awesome. I can count on you for that.
In my mind, when you start trading and money's on the line, you should have 4 systems and 1 plan.
So what do you mean, 4 systems?
Well, the reason I say that is because people tend to see trading as a single system, whereas in reality, what's happening is there's multiple systems. So it's no good just saying, right, I have a buy-sell model system, okay, and that's it. That's what I'm going to trade. Because you'll fail. What you need is a psychology system, you need a money management system, you need a buy-sell system, and you need a system for the market and the market condition. You need 4 systems and then 1 plan. And the plan is the important part because that's what you're trying to achieve, and that bit should stay rock solid. Now, the other systems can vary. And I know, what you're driving at here is really what you should do is, I'm going to be a trend trader. This is the system I'm going to trade, and you should stick at it for a long period of time because that's when you'll really learn something rather than changing. And generally what people do is they change their buy-sell system all the time. Okay, but they keep all the other systems the same. So they don't really change their psychology. They don't look at their money management or change that, or they don't look at the element of the market. So in a way, I'm saying you should have 1 system and stick at it so you can learn about the flow of trading, that it's not all winning or all losing, it's variably distributed. But at the same time, you kind of have to understand that there's more than 1 system required to be a trader. Have I completely derailed your point now?
Well, no, I think you've kind of got where I'm coming from. I would just say the main points I want to make are that when you start out, yes, concentrate on something, focus on what you believe in, not what you read in a book, not what I say or what Darren says or anyone else. Focus on what you believe in and build your confidence up that way. But in the end, you're going to have to add multiple systems. And the reason why is because you will learn over time that your system is going to work in a certain type of market. And you'll want other complementary systems that work in other types of markets. And traders, they paint themselves into a corner, I believe, because they think that they're going to get away with trading the same system by trading multiple markets. The problem with that is you don't get the same diversification factor that you would if you're trading a complementary system. So in other words, if you're Trader Bob and Trader Bob trades a breakout trading system and he trades it on the CAD yen, the Swissy, and the Euro Aussie, let's say, right? So he's trading these totally different pairs and he's trading a breakout system. And he thinks that he's diversified because he's trading these completely different pairs that are uncorrelated, right? Well, he's actually going to be much better off if he trades like a swing trading system and the breakout system on the same pair. Like that's actually going to be better off for that's going to blunt his drawdowns and whatever more. But you're right. I mean, I agree. In the beginning, you really need to focus on one thing and get good at one thing instead of hopping around a lot. So you're right. I mean, you knew kind of what I was going to say there, but I did want to make the point that eventually you're going to get bored and either you're going to completely change the way you trade, or the more healthy way I think to look at it is that, okay, I've already sort of, I'm really comfortable with system A. I really like the way it works, but now it's time for me to build something else that maybe works in a different market altogether as system A, and we'll call this system B, and we'll start to build this. And I think that's the way that a lot of traders are able to add to their, arsenal or whatever of trading systems, is by realizing where the shortfalls are in the system that they're comfortable with, and they can kind of build something, with that in mind. So, and I think that's a great way to do it. I think that we fall into the trap of thinking we're diversified when we're trading different markets, and it's really, really hard to do that. You just don't get the same effect that you would if you had multiple systems.
What do you think of this idea of achieving that same diversification just by changing the money management system? So you're essentially trading the same setups, but one will have like a 2R exit, and the other one will have at 4R trail your stop type exit. So when prices range in a bit more, the 2R one will perform as well as it always does, and then when price really moves strongly, then the one with the bigger targets will perform better.
Yeah, that's great, because what you're essentially doing, the way that you explain that, is you're diversifying the results. So when I was saying before about the systems, how they work in different types of markets, those exits work in different types of markets. So like you said, if it's a really choppy market, the trailing exit might not do as well, but your 2R target, that exit might do quite well. And when the market completely blasts off and has very shallow retracements, perhaps your trailing exit does really well and takes a huge chunk of that move. Whereas, your 2R only took a little tiny bite of that move. And so, that sort of thing. So yeah, I agree. I think the way I look at that, what you just said is exactly that, which is different exits are essentially going to take advantage of different types of markets that occur after you enter the trade.
And, the problem with this as well is that people are instantly going to look at different buy-sell models, different entry systems, rather than looking at the other elements of a strategy. So it's really important, like you were suggesting, have a different system for different market conditions. Don't just focus on a different entry system. Like, someone who perhaps trades outside bars will say, okay, well, I'll look at inside bars. You're not really changing your system there. You're changing your buy-sell entry system, but you're much better to say, well, okay, I'll look at a different way of, I'll look at different market conditions to decide which system to trade, or I'll look at different money management systems. That's going to reap more rewards than just changing the entry, in my opinion.
Yeah, absolutely. Yeah. So like if you backwards engineer it and you say, what kind of system will do well in a trending market, or what kind of system will do well in a sideways market, or what kind of system will do well in a volatile trend that has deep retracements against the trend, and what kind of system will do well in a trending market that has very shallow, weak retracements against the trend. You can kind of look at those different types of markets, or even a really range-bound market. What kind of system will do well in range-bound markets? Like, you can get a lot of interesting ideas from looking at the way that traders trade in these, in like trading competitions, because you see a whole range of different approaches. Like, sometimes you see these guys and they're just basically trading range-bound markets, like the interbank market. They'll just keep taking all these trades. Like, that's how they win the trading system, or the trading contest. Is they just keep taking all these trades in the interbank market period on the Hong Kong dollar or whatever. It's like these really crazy systems, but that can give you an idea of what kind of market should I build this system to work in. And you're right. Some people don't go far enough. They don't go far enough. They don't see it that way.
Yeah, and what's smart about that is they're looking for a market condition to exploit. They're not looking for a particular candle pattern or an entry. They're looking for a market condition. If you can find market conditions to exploit, that's going to help you much more than looking for a particular entry system.
Right. Yeah, exactly. Yep.
And the funny thing about this is as well, I mean, the question is aimed at people starting out trading, and really they're going to get no benefit from this podcast at all, because they're not going to listen to us anyway. They're going to do exactly what they want to do. And you can argue that the best way to start out trading is getting everything wrong. The danger with that is if you start out with a lot of money and lose it all and never recover. But really that whole period of making the same mistake over and over again does have an element of where you've made so many mistakes that the answer becomes obvious. And when you're just starting out, then what is obvious is usually wrong. You are gonna flip systems. You are gonna make all of the mistakes. You're gonna risk too much on your trades. You're gonna move your stop loss rather than keeping your money management system tight. You're gonna do all of those mistakes, and over time it'll become clear why that was a mistake. And me and you just sat here telling someone starting out, this is gonna be a mistake. Their belief is going to be so strong that the answer is some sort of golden egg. They're just not going to listen to us anyway.
Like, why do you think, like, when I think about the market wizards, almost all of them had a situation where they made a really serious mistake and they sort of swore to themselves they would never do that again. Why do you think it is that we have to make the mistake in order to know, okay, well, this is the right path? Why can't somebody just learn it? I'm sure there are some people that have just naturally said, well, I don't want to do that. Like, that would be crazy. They don't actually have to make the mistake. I mean, I'll give you a story. I had a friend. He's an extremely creative guy, and he's very, he comes up with the most amazing ideas. He never acts on them, but he has these great ideas, and then he'll see these products on, on TV or whatever, or the military will create something like that, and he thinks they're reading his brain or whatever. But he had this, there was this, his girlfriend had some on her keychain. She had, and I don't know if you would call it capsicum spray or whatever. So it's like in the States they call it pepper spray. And she had this on her keychain, right? And I guess when she was coming home late at night or whatever, she wanted to have something, in case someone tried to get her or whatever. Anyway, and he was like, that stuff can't really be that bad. And she said, no, it's really bad. Don't spray it. Don't do it. And he's like, yeah, I can't. No, that's not really. So she was off at work, and he took the spray, and he sprayed just a little tiny bit, just a tiny little on the wall in their apartment, and they had to move out for a week. So, but the thing is, he should have known, right? He should have known. You don't do that. You don't take the pepper spray and spray it on your wall. But yet he had to make, you know what I mean? But we're all that way. I'm not pointing fingers or anything. I'm just saying it's a great illustration of what we humans do. We just don't believe it unless we do it.
Yeah, and I think isn't there something called in psychology like a anchoring? So even though it, taking a really massive loss is going to be painful, you kind of have to experience it. So in the future, you've got something to kind of anchor that belief on. And no matter how much data people throw at you, that's not going to be as powerful as you actually experience it.
Yeah.
That's it. So my point before about it might actually be beneficial to flip systems for ages, because then you realize that essentially it's not going to make any difference, or you realize the elements that are making the difference and the ones that aren't.
So do you think that so you've got two traders. You got one, and this guy, he's we'll call him Al, and Al has made the catastrophic mistake. He completely blew up his little nest egg of savings that he was going to trade because he made some bad mistake about not sticking to a stop level or whatever, and he basically lost 95% of his money. And then we've got this other trader, we'll call her Helen, and Helen has never made a mistake like Al has, because she's very conscientious and she doesn't want to risk all that and she hasn't made that mistake, and she keeps chugging along, and she seems to do quite well. But in the end, 20, 40, 30 years out from now, which trader do you think will be in a better position to succeed?
Well, you'd have to say that Al has slightly better probabilities, but not certain.
But like, what if we get more information about Al and say Al is he also he's a compulsive gambler. Like, that's his hobby, right? He bets on horses.
Yeah. Well, that's it. Yeah. I mean, the probabilities are complex, aren't they?
Exactly. Yeah.
And people don't, and also, at the same time, people don't always learn from their mistakes, but you stand a better probability of learning from them if you've actually made them than if you haven't.
Yeah.
Adam's. I know Adam on the forum. His little quote is something about experts are just people that have made all the mistakes or something.
That's a good way to say it. Yeah. That's a great way to say it. Yeah. Yeah. And that reminds me of my friend, the guy who did the pepper spray thing in his apartment. He was trying to pick me up one time because I had this failed business, right? And he was trying to pick me up, and he said, he's like, he said, you know what? He said, I will always bet on the business guy who's got the failed business. He said, that's the guy I'm going to put my money into. You know what I mean? Because he's made the mistakes. He's gone through the troubles. He's done the blah, 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 blah. That was his point. And I don't think he was saying that just to give me a pick me up. I think he actually believed it, that's the guy he would invest in, is the guy who's gone through the...
Slightly oversimplifying it, but, I'll go back to Tom Basso. I listened to one of his podcasts, and he said that the biggest mistake he ever made was that there was a silver trade that he missed, that he should have taken, but he missed it for some stupid reason or other, and it was the biggest trade of the year. And he said, and from that point, that's when he automated his system, because he said that he was never ever in his life going to miss a trade again, purely because that one time that he missed a trade, it was a massive winner, so that really big lesson stuck with him, and it probably made him a much better trader.
Yeah. And I think that gets back to what I was talking about a couple podcasts ago, where it was, for most traders, the biggest pain is this missing out on the opportunity, on the big one. Missing out on the big one is much more painful than getting into a loser, or, making a mistake and it turns into a loser. The big pain really is the one that got away.
Yeah. And I see that a lot with people flipping systems. Perhaps you'll backtest a system over the weekend, it seems really great, and then you'll start trading it, and then you'll notice that there was a really big winner on your previous system, and then you flip back to your previous system, and just as you do that goes into a run of losing, and the new system you tested to suddenly takes off, and there's a massive winner there, and you just kind of... It's a really bad habit. It's really hard to turn those... is it a bias or is it emotion? I don't know, but it's really hard to turn that off.
Yeah, no doubt at all. Yeah. Well, I guess we've kind of hit this one pretty hard. I guess, from my point of view, diversification through systems and thinking in terms of types of markets is the way to go here, but certainly in the beginning you should just focus in on what you believe. So, most traders listening to this podcast, they're going to believe that the best way to trade is to find a turning point in the market. And so they're kind of like swing traders or even end of trend traders. And then the minority listening to this are probably going to be trend traders. Even though every single trading book says follow the trend, most traders don't actually, from what I've seen and from what I've tested, and I've tested quite a few traders, most traders don't like to trade that way. They don't like to follow the trend. It's much more uncomfortable for them to do that. So, but there are about 20% of the traders listening to this probably are very comfortable trading with the trend. So that's something to keep in mind when you build your first system. Just what's comfortable for you, what makes sense to you, because you want to do something that you're going to stick with, and not something that you're going to flip over again and massage and pull things out and rip it apart and turn it, Frankenstein it into something else. You just don't want to do that.
Yeah, I think my advice I'm slightly torn on giving advice for people starting out. I think from my point of view, I agree with what you say, but if you're starting out, have one system and make that system a really tight money management system. And then if you want to flip around and make mistakes and learn by trial and error, that might actually be a really good way to go. But make sure that your money management is locked down, so during that process you don't lose all of your money or too much money.
That's great advice. Can you explain a little bit about the money management, though, or maybe we should leave that for another episode? But I just want to make sure that people are clear what that means.
I'd say something simple like having a defined amount of risk on every trade. Okay, so it means that even if you are going to lose your money, you're going to lose it slowly at worst, and going on from that, just start with a small amount of money, because you're going to make mistakes. You will learn from those mistakes and they'll help you in the long run, but don't take such a catastrophic loss in that learning period that perhaps you stop trading altogether or something worse.
Yeah, something worse. And it's amazing how it hurts, even when it's a small amount of money. It still hurts.
Yeah, well, you've got the pain of losing and the ego side of that to deal with, and you don't want to add to that the fact that your kids can't eat or haven't got any shoes to go to school next year.
Well said, Darren. Well said. Well, we'll see you in the next episode. Thanks so much.
Okay, thanks, Walt.